Good afternoon. George Cavaligos for HFT Bonds. Had the right idea this morning, but I'm trading either with too big of size, my stops were too tight. I'm going to shrink my size down, give my stops a little bit of room. I was long twice, down basically near the lows, and got stopped out before my 16.5 support level was taken out. I should have had the stops below there. Everybody has to look at these things as their own personal demons, I guess. You know, we have to manage our own capital. We have to manage our own risk. Had the right idea. Couldn't pull the trigger a third time. Ended up going for a walk and came back and saw the market was trading back above 21, and you know, the rest is history. We're sitting up near the highs. Thursday, tomorrow. A lot of data tomorrow morning, ECB meeting, Bank of England meeting. You know, the numbers obviously with jobless claims that are going to be important. And then Friday's the unemployment number. Last Thursday we saw a similar situation where the market closed really well on Wednesday. And then on the Thursday we saw the correction start. I think actually Thursday was the high in the market, and then the correction started Thursday morning. We'll see. The way the market's sitting up at the highs here, looks like some shorts might be trapped here. Probably going to work our way a little bit higher tonight. Maybe take a look at the old highs at 27 plus, maybe even a touch higher. Bonds have obviously lagged way behind. That 1030 curve has continued to steepen out here. We're out 4 basis points in the week here, I think, if you look at the chart. And I think that, you know, the idea that we've been kicking around of buying dips in 10 years and selling rallies in bonds is still a valid idea going forward here. Bonds are still, what, a point below their bearish trend line. It's coming down slowly. I think it's around 150.12 right now. I wouldn't be surprised to see us test it, maybe on the non-farm data on Friday. We'll see. The numbers in terms of the economic data the last couple days have been a little bit stronger than expected overall. So maybe we see a little bit better non-farm number. Problem is the ADP number is a private payroll. Non-farm data includes public employees, and that's where the job losses have been predominantly clustered over the last year and a half, as municipalities and states and cities that can't print their own money are laying people off because the tax revenues are so far down, and their budgets are very bloated and in need of curtailment. So. All right, we're going to do a little webinar. We'll record it in case you can't join us at 4 o'clock today on how we're planning to establish this chat room, what our program is, and what we have planned for the future as we move forward here. Obviously, me improving my personal trading is job number 1 for me at the moment. But obviously, you know, I'm going to continue, even when I stop myself out like I did this morning. I'm going to continue to put data in the chat. We've got, obviously a bunch of great traders in there at the moment, and they're also putting data in the chat here. I think Charlie had some real good levels that he threw in there a couple times today. Charlie Reese, Jack McGrath, Art Main, those guys are old pros, and obviously a lot of the people that are in the chat room, guys like Cliff Fian, who's managed major desks for Canadian banks, and I'm sure a lot of the other people that I don't know have some tremendous backgrounds too, and we're going to try and keep building this community up, guys. So we'll see you tomorrow. Have a great night.